What's going on, Patreon? Welcome back to another post-market analysis, and we're looking at the Dow Jones here. So we're looking at April 29, 2024, and we're anticipating higher prices because of the Six Sister concept. So as you can see, we have these Thursday highs as well as these Wednesday highs, and as you can see, the Dow Jones has not taken out those highs, but the S&P 500 as well as the Nasdaq has taken out those highs, and the S&P and Nasdaq 500 as well as the Dow Jones are still seeking higher prices. So if the S&P 500 is all the way up here taking out these highs and the Nasdaq is up with it, but the Dow Jones is down here, then we can anticipate a strong momentum from the Dow Jones to ultimately push very high up. So it's just like a race, right? The S&P 500 and the Nasdaq are ahead of the race, but the Dow Jones is like on a slingshot, and as you can see, as you pull the slingshot back, it gives it more energy. So when you release the slingshot, it pushes up very far. So we were anticipating a strong push higher this morning on a Monday, pushing back up here, to then catch up to the S&P 500 as well as the Nasdaq. But unfortunately today we did kind of get like a consolidation type of day, which is kind of expected for NFP days like this. NFP weeks in general tend to be very tricky, and it tends to be very whipsawy, very consolidation back and forth, especially when we have high news events later down the road. So we do have news tomorrow, Wednesday, Thursday, and Friday. So most likely today was going to be a consolidated day to accumulate liquidity, right? We have to have these consolidated days to accumulate both sides of the marketplace and gather liquidity. So when the news comes out and the news driver really comes out, we can see that big push higher. So today did end up being the accumulation day, right? So we'll talk about the trade idea that we took this morning and how we're able to notice when we were able to notice when we were off sides and notice that today was going to be accumulation day, and we walked away. So we had this inversion fair value gap here, right? We had this inversion fair value gap. We're anticipating price to hold around this inversion fair value gap level on the H4 to then see that push to the upside, right? As well as, let me take into account this weekly. Let me take the green off. So let me take into account this weekly wick as well. So we had this weekly wick, which is a resistance level, right? We have a long wick here, the 50 and 75% level. If we anchor Fibonacci from high to low, that 50 and 75% level can be resistance level. So we're anticipating for the first half of the week to reach up into those 50 and 70% levels before seeing that continuation and downside, as well as we do have liquidity above us. So in terms of finding a drawn liquidity and forming a bias, right, that's how we form a bias, right? Where is the market most likely to seek next, right? We're in a Six Sister. We see the correlating assets already taking out these highs. We haven't taken out those highs yet. So that's a good area to reach up into. Plus we have that we do have resistance above us, right? The market could potentially reach up into this resistance level before then reaching lower. So and we do have this inversion fair value gap below us. So we have liquidity above us, plus we have a support level below us as well, right? So it would make sense for us to anticipate higher prices, right, as we hold above this higher time frame, right, support level, right? Its bias is framed based off of the higher time frame and where are we most likely to go next. So on the 1 hour here, coming into market open, we did have this 1 hour order block as well with us. So overall this morning we're anticipating higher prices, as well as this gap right here. As you can see here, we closed here at 4 p.m. and opened again at 6 p.m. But there's a gap. There's a massive gap there. So as price reaches back down into that gap, it then holds as support. And then once we leave it, we should leave it. So that's what we're anticipating this morning. We're anticipating price to reach down into this gap, find that support inside of this order block level, and then once left, it should leave it, right, reaching back up into this liquidity pool right above us. So that's the H1 here, nothing too crazy. And then coming down to the M15 here, coming down to M15 here, we opened up and we immediately ripped higher, taking out buy side liquidity. This is something that I should have taken into account for sure, right? So we also had this H1 bearish order block as well. So we had reasoning to go higher, but at the same time, we had reasoning for price to not go higher as well, right? So when we're taking longs, we shouldn't really want to take longs, especially after price has just taken out buy side liquidity, right? So if we have a bullish for value gap or an order block or some type of PD array, and we have a level of liquidity above us, if price takes out that liquidity pool first, that PD array is less likely to hold. So that's why when we have an area of liquidity, we want to tap into that PD array before taking out liquidity, because that's the highest probability. So when we came up here and took out this buy side liquidity, happens this bearish order block, um, right, I did take longs down here inside of this bullish fair value gap. I took longs down here inside this bullish fair value gap. Looking back at it, I probably should not have taken longs down here on this bullish fair value gap, simply because of the fact that we've just taken out liquidity and the fact that we were in a resistance zone. So like at the end of the day, it ended up consolidating right throughout the AM session, and we got this 11 o'clock like reversal going to lunch. So today ended up being an accumulation day, but still, even during days where it consolidates, you can still learn from it, right? So what we learned today is right, we've already known this, but right, you're going to take those same mistakes that you've learned already, but it's good taking those mistakes because then it solidifies it. So we know not to take a long setups, especially after we just take out that buy side liquidity, right? So that's something that we can learn, right? We want to tap into that bullish for that gap before taking out that liquidity pool, right? That like down here, we were inside this bullish for that gap, found support, and then we pushed up into that liquidity pool. That's what we want to see. This was the trade idea down here. This was not a good trade idea. So that's what we can learn today. Right, that's the main key factor we can learn today, right? You want to have that drawn liquidity and tap into P array before we reach up into that drawn liquidity. We did have but I did take longs here, and I did also mess up once more, which I got in on the long entry as we tapped into the fair value gap. I had my initial stop loss down here, but I aggressively moved it lower below this wick as we left. I'm an aggressive trader, right? So as soon as we tap into a PD array and I see signatures of price leaving, I like to scale into my trades. But during times like this, where it's NFP week or it's lower probability, like today is Monday. Monday is known to be low probability. Don't be so aggressive to scale into your trades. That's something that I've learned from today, right? You want to be aggressive when there's volatility inside the marketplace. Today there wasn't volatility inside the marketplace, so you have to be a lot less aggressive, and you have to take that initial trade with more risk, right? When there's less volatility, you have to use more risk on that initial trade, so you still get a better R multiple without having to rely on the scale end. So that's definitely something I've learned from today, and I want to share with you guys as well. So, right, trading is a lot more than just, technical analysis. It's these little tweaks and these little shifts and these little keys that you have to unlock through experience, and that's why you have to be kind of in the live markets or at least back testing, right? So you can gain that experience, so you can gain that chart work on a consistent basis, so you can learn these little tweaks that you can make to ultimately make you a very great trader. So it's these little tweaks like not taking this long inside of this bullish for VAG gap after we just taken out liquidity, and those little tweaks, like today was a low probability day because today there was no news, so there was no volatility today, and we kind of started off like with a strong push higher, and the volume wasn't there. So we know the volatility isn't there, right? The volatility wasn't there, so we shouldn't have been so aggressive when it came to scaling and moving our stop loss because of right it coming lower and taking us out before then pushing back higher and eventually just dropping lower. So you know even though today was 1 hour loss, we still learned so much from it that we can accept the loss and right, and learn from it and apply it to the next trading day so we can become better traders, right? That's how you have to look at losses. You have to look at losses from the lens of I've learned something today that will make me a better trader tomorrow. Right? I learned something today that's going to improve my win rate from a 50% to now a maybe 52%. I've learned something today that's going to make my R multiple go from a 1.8 R to now a 2 R, right? You want to learn from those losses as much as you can and find confidence in those losses, right? When I take a loss, I'm confident in it because I'm so used to winning, right? Because, when I win, it's just solidifying what I've been doing right. But when I take a loss, it's like, okay, what didn't I do right and how can I improve from it? So that's how you have to look at losses. So that's going to be the Dow Jones today. And the dollar, right, same thing, right? Just back and forth type of price action, very choppy. For the most part with the dollar, we were anticipating what were we anticipating this morning from the dollar. So the dollar kind of just opened up and dropped lower, which was very odd. Yeah, we did have this bearish order block as well as this bearish value gap. So we were just anticipating a pullback. Yeah, we were anticipating that New York retracement on the dollar. That's what it was. We were anticipating that New York retracement on the dollar, but ultimately we wanted to see, right, it potentially give that New York retracement, which it did. It gave that New York retracement back up into this, looks like H4 bearish order block, back up into this H4 bearish order block before then find that rejection and seeing that push to the downside. So that was the dollar today, seeing that New York retracement for that continuation lower. And euro, we were talking about potentially lower prices on euro because of the fact of the SMT divergence, right? We seen GBP take out this high, but euro didn't take out this high, so that's an SMT divergence, right? Euro and GBP are correlated together, so GBP taking out this high, but euro not taking out this high at the time, right? That was SMT divergence, and we seen euro reach back up into this bearish order block level right here on the 1 hour, and we're anticipating a rejection, which if we can go down to a lower time frame, you can see we came back up into that 1 hour order block level right here during the time right between 7 a.m., right, which is the MMXM hour, right, 7 a.m. to 7 a.m. to 11, that MMXM hours, we came up into that H1 order block level. We broke lower from it, then we gave this M15 bearish order block level. Right, we came a little higher into a H1 bearish order block, could not hold, gave that rejection wick. Then we came down into the M15 order block level. I would 100% take a short here inside the M15. Right, stop loss back above here. Targeting back below these lows for a 2 to 1 R. Back below those London lows. So just simplifying this even more for you guys, right? So we seen the dollar had that massive push to the downside, right? We seen the dollar had that massive push to the downside and it was given that retracement. So we know dollar was pushing higher. Then we had that SMT divergence with the GBP USD, where GBP took out this high, but Euro didn't. Okay, so that's another confluence. Then we had this H1 bearish order block. Okay, so when we reach up into this H1 order block during that 7 a.m. New York session MMXM time I talk about, I'm looking for if we can break away from it. We broke away from it. We gave this rejection wick that we look for. Like when it comes to order blocks, we gave that rejection wick, broke lower. Okay. Then we create this M15 bearish order block. We came up into that M15 bearish order block, gave that rejection wick once again, and then we went lower from it. I'm more than confident taking shorts here, targeting back below these London lows, right? Targeting back below these London lows, right? Just for a 2 to 1 R, right? Because remember, today is Monday and there was no news, meaning the volatility is not there, right? When volatility is not present inside the marketplace, you want to be a lot more easygoing when it comes to taking profits, right? 2 to 1 R. If there was volatility, I'd be glad to take a 3 to 1 R, but there wasn't. And right, today was a Monday with no news. That's the least volatility like day out of the entire week. So that's euro as well as GBP. Right, looking at GBP, coming into the marketplace here, we had looks to be about the pretty sure there was, yeah, it was about a 30 minute, right? The 30 minute is very good, right? 30 minute bearish order block coming into 7 a.m. So you could have for sure taken a short here as it approached that 30-minute bearish order block, could not break above it, and then we dropped lower, right? We did react off of this bullish order block. So we did react off of this bullish order block. So this probably would have been a break-even trade, right? Right, trying to be comfortable, right, taking trades off at break even and not letting it reverse on you. So this probably would have been break even trade, but so this is why we trade euro instead, right? Since euro had that SMT divergence and didn't take out that high, we would trade euro instead because euro would then give us the best probability. But then again, we had that SMT divergence at the lows. See this? Okay, let's say you didn't get the shorts on euro. Euro took out this low, but the GBP didn't. So now we have a SMT divergence on GBP. GBP saw this push higher. There's a bullish for that gap right here. Take longs right here. Boom. Right? 2 to 1 R. Back above these highs. Boom. Right? You know, if you didn't take the SMT divergence short on Euro USD, you could have took the SMT divergence longs on GBP USD. So overall, just like, I mean, like how these markets are correlated to each other, like use it to your advantage, right? These are correlations that not a lot of traders know. Like you're one of the few traders that actually know about this, so use it to your advantage to absolutely just right just use this information to just go ham on the markets. Just use this information to just go crazy. So yeah, on gold today I'm trying to wonder what was our idea on gold. I think gold, yeah, we reacted off of this 50% level, right? So when we have long wicks like this, especially on the higher time frames, like daily, 4 hour, 1 hour, these long wicks, they can be resistance levels. So we reached up into this 50% level of that long wick. So 9 o'clock, we were down here inside of this bullish order block. We're inside of this bullish order block here at 9 o'clock, right? I would never go short inside of a bullish order block, right? If you're in a higher time frame support level, right, and you're anticipating shorts, you have to sit on your hands until that higher time frame level is broken and then inverted, right? So this never got broken. So if you thought about shorts, you had to sit on your hands and then switch your bias to now longs. So that's just a tip for you guys, right? You guys don't want to be shorting inside support levels or longing inside resistance levels. You want to sit on your hands. Either you miss that opportunity because you had the wrong bias, or you're able to notice the shift and then take the inversion trade, right? You guys want to be focusing on the highest probability rather than trying to trade everything, right? Because as long as you can focus on choosing the highest probability trades, your win rate will increase. And as your win rate increase, right, you make more on those wins, and that's how you're able to really scale up, like anything in trading, right? You're really to scale up, right? You're choosing those highest probabilities, so your chances of winning are a lot more, and your chances of making more on those wins are a lot more. So we had this bullish order block right here on the H1. Coming into 9 o'clock, we tapped up into it. We left it a little bit, came back down into it. This is why if you're taking longs right inside of a higher time frame like order block level, you want to put your stop loss below it, right? Just in case, because price action may take out this internal range liquidity, right? This internal low, but remain inside this H1 order block. So you don't want to be too aggressive when it comes to these higher time frame order block levels. And then we start to leave it coming back down into this order block level. Boom, this is our time. This is a higher probability order block because this is the order block because this is the last down close candle that tapped into this higher time frame order block, as well as we swept liquidity. So there's tons of orders at this level. So when it taps into this level, you can see how it quickly leaves, right? Take profit back above these highs. So I'd probably take longs down here, stop loss below the H1 order block, take profit back above these highs for a 2-to-1 R, and we reach up into that 50% level. Right, during these low volatility days like Monday today where there was no news, you want to be quicker when it comes to taking profit and being content with taking profit at like a 2-to-1 R, right? So that's gold, right? The MMXM model for gold, right? We had that H1 order block. We had that H1 order block down here, right? Price left it, right? Take the longs inside the order block level as price comes back down into it. Just in case you missed this entry, stop loss below the H1 order block, and you could have probably scaled in here, right, as it gave you that reentry, which is something that I'm, starting to do a lot more is scaling in based off of re-entry, because right now, a bad habit of me is I get in on a good trade inside of a bullish fair value gap, and as the fair value gap leaves, I'd immediately scale in. And that can be tricky because sometimes, just sometimes, well, especially like today, price could come down and take out that low and then push higher. On the few occasions it can do that. So I'm trying to scale in a lot more precise. So I'm putting a lot more risk behind my trades, um, so I can focus on choosing the highest probability setup so I wouldn't need to scale in, right? Scaling in should be like a more so like, oh, this is easy gonna go lower. I'm just gonna scale in here and make more. So I'm gonna add more behind my trades, right? Add more risk behind my trades so that I can focus on getting in on that initial entry with a great stop loss, because right now the market is kind of tricky, especially during NFP weeks where it can whipsaw around. It can stop hunt a lot. So you want to get in um, at that initial trade and have a great stop loss, because you can have the right idea, but if you have the wrong stop loss, it could still take you out. So that's something you really got to pay attention to, right? So right in this Patreon, we're teaching you the whole thing, right? We're teaching you technical analysis, right? The fundamental analysis side of it, right? Using intermarket analysis, plus we're teaching you trade management and stop placements, right? With psychology as well, right? Importance of, right, walking away and just not focusing on, trying to trade everything and trying to, win every day, right? Focusing on the long term. So that's going to be it for the post market analysis. Hope you guys learned a lot from this. Right, I'll see you guys tomorrow.